Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Circle Internet Group.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis of Circle.
Yeah.
This is a company that has, really moved beyond the speculative side of crypto.
Right.
It's firmly planted itself as, essential infrastructure.
The plumbing.
Exactly, the plumbing. When you look at where they sit, they are the world's second largest stablecoin issuer. This makes them integral to the whole global digital asset ecosystem. We really see them as an infrastructure leader.
And you can see that infrastructure position plain as day in the top line numbers. For you, the investor, the scale is just massive. We're looking at a trailing 12-month revenue that clocked in at an incredible $2.41 billion.
It's not just the size, though. It's the trajectory.
Totally. Their most recent quarter, Q3 2025, revenue came in at $658.08 million.
Which was ahead of what the street was expecting.
Yeah, beat estimates of about $645.7 million. And let's not forget the baseline growth here. Their 2024 revenue grew by 15.6% year over year. The story is just robust.
The revenue is certainly impressive. It speaks to their market share, but we have to peel back that layer and talk about the profit volatility.
Oh, okay.
This is probably the single most important nuance of the Circle story that you need to understand.
You're talking about the net income. That number was jarring, wasn't it?
Jarring is an understatement. Net income for the most recent quarter was a massive loss. Negative $482.1 million.
Wow.
Yeah. And that's a monumental swing down from the profit they reported just the quarter prior, a positive $64.79 million.
That is a $500 million shift. I mean, for a growth company trading at a premium, that kind of loss, it would typically send investors running. So what's behind this?
It's not just poor execution, not entirely. This volatility is a direct result of how their business model interacts with, macroeconomics, specifically interest rates. Think of Circle like a bank. For every dollar of USDC they issue, they hold $1 in reserves, usually in things like very short-term U.S. Treasury bills.
So those T-bills are what generate their income. They're basically earning interest on, over $70 billion in assets?
Right, precisely. It's $73.7 billion, to be exact. The yield they earn on those reserves is a huge but very variable source of income.
So when rates go up, they do well.
They earn a fortune. But when the market anticipates future rate cuts, it can force them to revalue those assets, and that can cause massive paper losses on their balance sheet. That negative $482 million number reflects that acute exposure.
Okay, that context is critical. So their bottom line is almost like a levered bet on Fed policy.
In a way, yes.
But despite that $500 million loss, the market seems completely unshaken. Analysts are projecting a massive rebound for Q4.
The market is absolutely forward-looking. They're expecting revenue of around $706.84 million and an EPS of about 22 cents.
And that's reflected in the valuation, right? The forward PE is up there.
Yeah. It's sitting at 62.65. Now, for those of you who aren't steeped in valuation metrics, a forward PE that high screams one thing. Wall Street thinks that loss was a one-off. They believe the long-term growth story is totally intact.
So the high price is justified by their moat.
Yeah.
But how resilient is that balance sheet really with these huge profit swings?
It's remarkably strong, and that's a key part of the thesis. Remember that $73.7 billion in USDC circulation?
Yeah.
That provides a substantial foundational asset base. They are required to maintain strong liquidity to back those reserves, and they do. On top of that, their corporate debt is low, and they actually reported positive free cash flow despite the net income loss.
That's the shock absorber then.
It is. It lets them weather these market swings.
And they aren't just sitting on those reserves, they're innovating. I'm thinking about the launch of the ARC blockchain network.
That's a major catalyst. CEO Jeremy Allaire isn't aiming small with this. He's framed ARC as becoming the economic operating system for the internet.
Which is a huge vision.
It is. It moves Circle from just being a stablecoin issuer to a full-on platform provider. That drives enormous network effects, and that is the bedrock of sustainable growth.
Okay, so that gives us a clear picture of the fundamentals. Let's shift gears and look at the price action. What are the charts telling us?
The charts are telling a story of major recovery and strength. The stock basically absorbed that bad news from Q3.
And it's bounced back.
Oh, yeah. Shares have rebounded a very solid 11.1% over the past month. And if you zoom out, year over year, the stock is up 97.26%. the technical picture is undeniably bullish.
So where's the floor? What's the foundational level that technicians are watching?
Well, traders are looking at that support level that's been tested and held multiple times. For Circle, that's in the critical 67 to 69.70 range.
And holding that gives buyers confidence.
Exactly. And looking up the chart, you've got initial resistance right at $78. That's the psychological level it needs to break.
And if it pushes through 78, what's the target then?
Yeah. If we get a sustained breakout, the picture changes entirely. The target range opens up, potentially pushing the stock into the $84 to $92 zone.
And the momentum indicators back this up.
They do. The stock is trading healthily above both the 50-day and, critically, the long-term 200-day moving averages. When a stock is above the 200-day, it signals the long-term trend is still positive.
What about the speed of the move? Are we getting overgot?
That's where the RSI, the Relative Strength Index, comes in. It's sitting neutral to bullish, which is actually ideal. It means there's strong upward momentum, but it's not yet overheated.
And the Manzieri.
The MANZD also shows a positive bullish setup. It confirms the trajectory has substance.
So if we combine all that, the resilient fundamentals and the strong technicals, what's the outlook for the next year?
Based on the current data, a bullish trading range of, say, $68 to $100 is expected to hold into February 2026. It gives traders a pretty clear blueprint.
Okay, now for the interesting part, the conflicting signals. We have this extreme optimism, but also some clear reasons for caution. Let's start with the upside. What's driving the stock?
The news flow has been overwhelmingly positive. We know Q3 beat expectations, but look at the analyst consensus. It suggests nearly 90% upside from here.
What's the target price?
The average 12-month target price sits at a staggering $144.92.
Whoa, wait, let's pause on that. $144. That is almost double where it is now.
It is.
And this is coming from analysts who just watched the company post a $482 million loss. That requires a huge leap of faith.
It does. It requires absolute conviction that the profit volatility is fixed and that USDC adoption will just continue, uninterrupted. That target price tells you that analysts see Circle as a disruptive tech leader, not a cyclical financial stock.
But that conviction isn't universally shared, is it? We have to talk about the insider selling.
Absolutely. This is a red flag. When the street's telling you to buy with a $144 target, but the insiders, the people who know the company best, are selling, you have to pay attention.
And we've seen some of that recently.
Yes. Multiple Form 144 filings in November 2025.
Can you just quickly explain what a Form 144 is for everyone listening?
Of course. It's a notice filed with the SEC indicating an insider's intent to sell restricted stock. We saw a large block sale on November 14th that totaled over $15.9 million in proceeds.
$15.9 million. That's a lot of stock. Why is that a cautionary signal and not just, normal diversification?
It's the size and the timing. When a large sale happens right after an earnings beat and right before a critical Q4, it raises questions. You have to wonder how much confidence those insiders really have in that $144 target.
So it's something to monitor.
Definitely. If this becomes a trend, it often signals that management thinks the stock is fully valued or maybe even overvalued.
Okay, so that sets up the tension for the next 3 months. What specific events could push past that insider selling noise and validate those high analyst targets?
The single most immediate catalyst is the Q4 2025 earnings announcement. That's scheduled for February 10th, 2026. A strong beat there could solidify the market's conviction.
And beyond the earnings report, what should we be watching day to day?
Continued adoption of the ARC network, especially institutional adoption. If major banks start building on ARC, that's huge validation. Also, any announcements on cross-border payment partnerships?
And regulation. That always seems to be the big variable.
It is. Any positive regulatory progress in the US or the EU would be a massive tailwind. Certainty reduces risk and could unlock billions in new circulation from institutions that are still on the sidelines.
Now, looking further out, beyond that 3-month window, what are the long-term, more speculative catalysts?
Geographic expansion is huge. Circle is still heavily focused on developed markets, but expansion into Latin America or the APAC markets could unlock significant demand.
And then there's the chatter, the unconfirmed speculation.
Right. The consistent whisper is potential M&A interest from major financial institutions, legacy banks or large payment networks looking to acquire that stablecoin infrastructure.
That's all unconfirmed, of course.
Completely unconfirmed, but it highlights the strategic value. Securing new regulatory clarity in Asia or the EU would also be a game changer.
Okay, we've covered a lot of upside. Let's pivot back to risk. Besides the insider sales, what are the key company-specific risks?
The first risk is the one we already detailed, that interest rate exposure. If we enter a rapid rate cut environment, we could see a repeat of that massive net income loss.
And the second major risk?
The ongoing regulatory overhang. Stablecoin oversight is still in flux in major markets. Restrictive regulation could severely limit their ability to grow. That risk is always looming.
And what about the sector as a whole? Circle doesn't operate in a vacuum.
That's right. Broader crypto market volatility still drives sentiment. If the whole digital asset market pulls back, Circle will feel that pressure.
And competition.
Competition is fierce. They're number 2. But they face constant pressure from Tether, which is still number 1. Plus, new entrants are always trying to break into the space. They have to keep innovating just to stay in place.
This has been a fascinating breakdown. You have analysts pushing for $144, insiders cashing out millions, and a business model that's both essential and highly volatile.
The key opportunity here is Circle's established market leadership and that lineup of near-term catalysts, Q4 earnings, ARC adoption, and potential regulatory wins.
It sounds like an investment that works for a couple of different types of people.
I think so. The thesis really works for 2 different investors. It appeals to short-term traders looking for momentum, and it appeals to long-term investors focused on the structural growth of digital finance.
So a bet on the future of financial rails.
Exactly. When you buy Circle, you're betting on the rails that the next global economy is being built upon. That's a powerful proposition as long as you monitor that insider activity and really understand the interest rate exposure.
Definitely something for you to think about as you watch this space evolve.